insurance world based on dividends.
Oh, yeah.
Yeah.
Oh, yeah.
100%. Don't buy anything in the life insurance realm thinking that you're investing.
Yeah. Yeah.
You don't invest in life insurance.
Not at all. So I feel like I'm gonna just say it. Dave Ramsey doesn't know what infinite banking is. I'm gonna say it. All right, I'll get all the hate that I want on the comments.
What do you say about Dave?
Again, we're graduates, so we drink the Dave Ramsey juice. We drink it hard. So what I want to say is Dave Ramsey does not understand infinite banking because we are.
Yeah, you get what you pay for.
Yeah.
Yeah, Dave, you fired up about this one.
Man, I tell you what, pisses me off. Infinite banking my butt.
Okay, Dave.
Infinite banking is.
Has he said anything about infinite banking?
No, that's what I'm like. What pisses me off, Dave, is that you keep misinforming the public about what infinite banking or whole life insurance is. You're misinforming so many people. We were part of it. I'm sorry, again, we're going to get hate in the comments, but this is what makes me so upset because we have so many people coming to us confused, don't understand what these products are, and they're making judgments, financial judgments about information that is incorrect.
Welcome back, guys. Josh here, get your trusted source in the financial world. And today, we are talking about Wealth Nation. In this video, they made about infinite banking. You know, infinite banking is a very common strategy individuals are proposing nowadays. And I see a lot of people talking about it. So today, I just wanted us to really break down what they said in this video, just so we all have full disclosure, just so we can see if this is something that makes sense for the majority of people. So let's get into this first point that she makes. Here we go.
We're talking about infinite banking. Infinite banking is what happens when you buy a whole life insurance policy. Meaning, what are you doing with the cash value to create cash flow? So you're borrowing from your life insurance policy and you're either investing it,
From the insurance company. You're borrowing from the insurance company.
Thank you. Yes, you're borrowing the cash value from the insurance company to invest, to make money. So we haven't even talked about what's happening over here as we're creating our own bank account, basically our own banking system. So
on the surface, this sounds like it makes a lot of sense. This really sounds like it makes a lot of sense on the surface, but let's really scrutinize what she's talking about. And because I'm an insurance agent, I can pull up one of these policies. So let's quickly design a policy for a 40-year-old male who's going to contribute $5,000 a year, created for max accumulation, minimum face value, and increasing death benefit option. This is the way they design these policies for cash value growth. So I'm showing you the best optimal version of one of these policies. So let's really look into it. So looking at this policy, let's say year 3, we want to get started on our infinite banking. We put in $15,000 to this policy, scroll over a bit, and look how much we can borrow. $12,300. So with this in mind, think about what she said. We're going to borrow against our insurance policy from the insurance company, so they say. But you're only limited to the amount of accumulated value you have in your policy. So you put in 15 and you can borrow 12. Sounds like you're creating an unnecessary middleman here. It makes far more sense to take that 15, create those investments, create that cash flow, and then begin to pay an insurance policy. So please don't get it backwards. It sounds really good on the surface, but when you really scrutinize it, it's like, why would I do that? Okay, so let's move on to the next point that I heard them make.
Infinite banking is basically replacing the banking function.
Yes.
Because when we think about banks, what we have is our deposits that go into the bank. Every time we get paid, we deposit money into the bank. Whenever we need a loan, we are getting a loan from the pool of deposits that's been made into that bank.
absolutely.
So whenever we do infinite banking, we're doing the exact same thing, just on our own scale. So we have our deposits, which we're making our policy premium payments. And the only way we can get a loan is if we build up enough cash to where we can use our policy as collateral to borrow from the insurance company.
Yeah, and you're basically using your...
Hey, the difference is with the bank and your infinite banking is that you are limited to how much you contribute to a policy, and you can't get more than that. So if you put 15 in within 3 years, you can only borrow 12. Whereas a bank, like you mentioned, has a pool of deposits. And you can go in and borrow a large sum of money. That's how you see people get mortgages, finance vehicles. And guys, I'm not for the banks, I'm not for any insurance company. I'm just giving you full disclosure. Don't fall into infinite banking thinking you're gonna be able to mortgage homes and create a real estate empire off of it. Before you make a decision, please have full information. You're not necessarily banking with, especially within the first few years. You put in 15, you only have 12 to borrow against. That's another factor. They're gonna charge you an interest rate on the money that you borrow. And if you do not pay that policy back within the proper time, with the proper amount, your policy will lapse. The interest rates on a lot of insurance policies are about 4%, 4 to 5%, which is the same the bank is gonna charge you on a mortgage, usually, maybe even less. So we really have to scrutinize our options when we're making these decisions. And that's the way it goes. So let's look at the last point I wanted to touch today, and then we'll recap.
Collateral.
Right. Now, what everyone should be up in arms about is what the banks are actually doing with our money.
True.
They pull together our money, and then the reason why they pay us a small amount of interest is because we are lending them money.
Yes, yeah,
Remember?
Yeah. Oh, yeah. Did we know that?
Yeah, our deposits inside the bank, the reason why they pay us interest is because they are borrowing our money.
Yeah. The money that you see in your bank account is out moving, being lent out for mortgages, cars, etc.
Right.
Yeah.
If we think about it, we're getting a loan from ourselves.
Yeah, it's the same way.
So everything that Dave Ramsey talked about
So listen, we shouldn't be upset with a bank. We shouldn't be upset with an insurance company. These are institutions. To be honest, they don't care. They're in the business of making money. You understand? Yes, they give you an interest rate on your savings, very small be it, but the bank provides a lot of options for you, which is why they're good for certain reasons. First of all, safety. Banks usually get bailed out if there's a horrible economic recession. Banks are federally insured. If money somehow disappears, it is federally insured. So there is definitely a point for banks. There's a reason for them. I would never use an insurance policy as an emergency fund. And we'll talk about that in another video, but let's just focus here. So another point that you just heard him say is they're basically lending you our money. I would say it's the complete opposite. That's what you see in an insurance policy. Think about it. You go to a bank, you put in $20,000 into your savings account, and you can borrow up to, let's say, $300,000 on a mortgage. That's not your money. You didn't get $280,000 out of nowhere. On the contrary, you go into an insurance policy, you contributed $15,000 into it, and you can only borrow 12. Who is really borrowing their own money here within the first 3 years? Of course, you can overfund these things and have the cash value build faster. But most people, if they had resources like that, wouldn't be looking at insurance as their first option to create banking opportunities. So with all that in mind, banks serve a purpose, insurance serves a purpose. When you're meeting with an insurance agent, they're gonna throw out some few terms. Don't follow the herd. You have to think differently, X, Y, and Z. Scrutinize the information. If something sounds too good to be true, it probably is at the end of the day. You wanna know worst case scenario, what happens with these policies. So let's take worst case scenario here, or a possible bad case scenario. 5 years in, you've put in $25,000. You can borrow $22,000, but God forbid something happens and you can no longer fund this policy. What you would have to do is surrender it. And when you surrendered these policies, look at how much you would get within the first 5 years if you had to stop paying. You would only be able to have $17,000. You put in 25, and if you surrender the policy, you only have 17. That is a risk. But you'll never hear that coming out of the mouth of these agents. So with that being said, I hope this video was helpful. I hope it could offer some more clarity about these situations. So it's not just one extreme or the other extreme, somebody who's all for it, somebody who's completely against it. I'm somewhere in the middle. I'm objective. You know, I don't care what you do. It's up to you. But it has to be what's best for you. And that's what we're here for. So if you would like to meet with an insurance agent, somebody who's going to help you put together your insurance planning, you know, feel free to hit me up. I'm also a financial advisor, so if you want to work in that realm, we could work in that realm as well. With that being said, I hope you all have a good day. God bless you all. Till next time. Take care.
Every day by day, I just they celebrate. Everything I do, we just they penetrate. I just want to say, oh, thank you, Jehovah. See, I'm living.